And today, we need to talk about Opendoor. The stock is up more than 100% in just a few days. But the question is this real growth or another meme-driven explosion? Let's dive in. Welcome to MarketLens, where we analyze market trends, breakout stocks, and the numbers behind the headlines. If you're looking for hype-free, data-driven insights, you're in the right place. Opendoor Technologies, ticker symbol OPEN, operates in the real estate tech space. They pioneered the iBuying model, buying homes directly from sellers, lightly renovating them, and then flipping them on the open market. Sounds simple, but the business is brutally complex, especially when mortgage rates are high and housing demand fluctuates. This company went public via SPAC in 2020, once valued at nearly $18 billion. Today, less than $3 billion even after the rally. So what triggered this sudden move? It all began with Eric Jackson, a hedge fund manager, tweeting that Opendoor could be a 100 bagger. Reddit, StockTwits, and meme stock traders jumped in, triggering a short squeeze. Opendoor's short interest is currently estimated at 25%, meaning a large portion of investors are betting against it. As price moved higher, short sellers were forced to cover, adding fuel to the rally. The volume? Over 1.8 billion shares traded in a single day, nearly 10 times the average. But let's slow down and look at the actual numbers. In Q1 2025, Opendoor reported $2 billion in revenue, $81 million gross profit, $108 million net loss. Gross margin improved to 6.8%. Up from negative territory last year, and cash reserves stand at $1.1 billion, down from $1.7 billion a year ago. These numbers suggest one thing: Opendoor is shrinking its operation to survive. Less risk, fewer homes, better margins, but still deeply unprofitable. Now, here's where it gets interesting. Opendoor has a partnership with Zillow, one of the biggest real estate platforms in the US. Here's how it works. When a Zillow user lists their home, Opendoor can offer a direct cash bid within seconds. Fully digital. This deal gives Opendoor access to millions of home sellers without needing to spend heavily on customer acquisition. If it scales well, this could be a game changer. From a technical perspective, the stock broke through major resistance at $1.9. Chart watchers are calling it a classic breakout, but technicals only tell part of the story. The bigger question is, will buyers stick around once the hype fades? Because make no mistake, this is still a high-risk play. Opendoor burns cash, and the housing market remains uncertain. It's also still down 80% from its all-time high. So, is Opendoor worth a bet? Short-term traders might ride the momentum, and the short interest still supports potential upside. But long-term investors need to watch cash runway, Zillow pipeline conversion, and margin improvements over the next 2 quarters. Let me know in the comments, do you think Opendoor is a turnaround story or just another meme flameout? If you enjoyed this analysis, make sure to like the video, subscribe to MarketLens, and hit the bell. We bring you clear, honest market insight without the noise. See you in the next one.